Welcome. In this video, we will dive deeper into the world of candlesticks and trends and unlock the ability to predicting market moves like a pro and maximizing your trading potential. In our last video, we laid the foundation for your trading journey. Now buckle up, it's time to elevate your trading game. Candlesticks. Candlestick charting is an integral part of trading analysis, providing valuable insight into market sentiment, price action, and potential trading opportunities. It is a powerful tool that utilizes unique visual representation of price movements over a specific period of time. Candlesticks are a staple in the financial trading and provide a comprehensive overview of price fluctuations, market sentiment, and potential trading opportunities. They are a visual language of price action, offering insights into buying and selling pressure, reversals, and trends. By analyzing candlestick patterns and their context within the overall chart, traders can gain deeper understanding of market dynamics and make more informed trading decisions. How did candlesticks come about? They are actually called Japanese candlesticks because they started in Japan in the 18th century by Munisa Homa. Please, Japanese, if any of you see this and I made a mistake with this pronunciation, I tried. It's not my first language. Candlesticks were initially used by rice traders to track price fluctuations. In the 19th century, candlestick charting gained popularity in the West through the work of Steve Nielsen, who introduced the technique into English-speaking traders in the 1990s. And today, in the 21st century, candlestick charting is a widely adopted and recognized method of technical analysis used by traders globally. When you see a green candle, green is bullish, red is bearish. Each candle is a representation of what happened within that time frame, day, month, or week. So if you're on a chart, if it's a month chart, if you see one green candle, it means price was bullish. If price was bullish, it means price went up. If you see a red candle, it means all through that month, price, the overall of that month, price went down. So if you're on the daily time frame, one candle is for the day, 4 hour, 1 hour, 30 minutes, and so on. Candlesticks have a body, this, upper shadow, and lower shadow. 4 components of candlesticks. It has the open. The open is the price at which the asset first trades during a given time period. It is represented at the bottom of the body of the bullish because price starts low and goes up. And then it's represented at the top of the bearish candle because on the bearish, price starts up and goes down. And then we have the high. The high is the highest price reached during that time period. Whatever time it is, the highest time reached in that time period is the high. It is represented at the top of the upper shadow or the wick. Then we have the low. It is the lowest price reached during that period. It is represented at the bottom of the lower shadow or wick. The close is where the price closed. So for the close on the bullish candle, it's represented at the top. On the bearish candle, it's represented at the bottom. Now let's go to candle patterns, because candles have patterns. We have bullish candle patterns. One popular candle pattern, bullish candle pattern, is the hammer. The hammer is a bullish candlestick pattern that indicates a potential reversal of a downtrend. It has a small body and a long lower shadow or wick, whatever you're comfortable with. Next, we have a morning star. Morning star is a 3-candle bullish reversal pattern that indicates a potential shift in the market sentiment from bearish to bullish. It consists of a bearish candle, a small body candle, and then another bullish candle that closes above the middle of the first candle. So bearish candle, a small candle, and another candle that closes above the middle. Next, we have bullish engulfing. A bullish engulfing pattern is a 2-candle pattern that signals a potential reversal of a downtrend. It occurs when a bullish candle completely engulfs a bearish candle. Next, we have piercing line. A piercing line pattern is a bullish reversal pattern that occurs when a bearish candle is followed by a bullish candle that closes more than halfway through the body of the previous bearish candle. Let's touch some bearish candlestick patterns. First, we have the shooting star. It is the opposite of the hammer. You can see upside down. A shooting star is a bearish candlestick pattern that indicates a potential reversal in an uptrend. Uptrend, reversal. It has a small body and a long upper shadow and a short lower shadow. So sometimes you would have like a small wick here in it. But we'll see that when we start getting to the chart. So quick one, just before we continue. We are touching on basics for now before we start getting into the chart. Think about English language. As children, we started by learning A, B, C, D, E, F, G. Now as adults, we don't walk around saying A, B, C, D, E, F, G. But those alphabets are the reason why we can put words together. So that is what we're doing right now. We need to touch all of this. You need to know why you're doing what you're doing before we start getting into other stuff. So as a beginner trader, be patient. If you're someone that already knows all of these things, then it's fine. You don't need to, well, you can watch to remind yourself, but this is for beginners. Anyway, let's continue. Evening star. The evening star is the opposite of the morning star. It's a three-candle bearish reversal pattern that indicates a potential shift in the market sentiment from bullish to bearish. It consists of a bullish candle, a small bearish candle, and another bearish candle that closes more than halfway of the first candle, which is the bullish candle. Next, we have a bearish engulfing, opposite of a bullish engulfing. It is where we have a bearish candle. It's a pattern, a 2-candle pattern that signals a reversal. It occurs when a bearish candle completely engulfs the previous bullish candle. Next, dark cloud cover. A dark cloud cover pattern is a bearish reversal pattern that occurs when a bullish candle is followed by a bearish candle that closes more than halfway through the body of the candle. A key aspect of successful forex trading is understanding and analyzing trends. Trends are the general direction of price movement in a given time frame, and recognizing them can significantly increase your chances of making profitable trades. Anyway, before we continue, if these videos are helping you, please try to subscribe, like, leave a comment below if you have any questions to ask or whatever, and also click on the notification button. That notification is the most important to me. Subscribers are good, likes are good, but the reason is because this old YouTube was created to help traders get better, and because I've been doing that on TradingView, but then I decided to use the opportunity to just create beginner videos as well. Every morning I share videos of what I am looking at on the market. Every morning in London session, I share these videos before I get into any trade. Been doing it on TradingView, then it was suggested that I should do it on YouTube to enable people interact better. So the importance of setting the notification is just so that you can see the post, you can see the videos immediately I post it, so you can have the opportunity to watch it play out and you can learn from it. So click that subscribe button, like, and notification button. Now let's continue. Bullish trend. A bullish trend is characterized by a sustained upward price movement where the price of an asset consistently makes higher highs and higher lows. We spoke about this in our first video, so this is an indication of higher highs and higher lows. But like I said, we're doing the basics. We'll get into the charts when we've covered all the basics, and we would go through all of this in real time on the charts. Traders in bullish trend, often look to identify these trends and exploit their potentials for profits. But by the way, why this term? If you are a beginner trader, you wonder why bull, why bear. Well, I'll tell you. A bull attacks by thrusting its horns, and whatever a bull hits, it takes it up Well, that's the way I can describe it. As a result of that pattern of attack, a price going up is regarded as a bull trend, and a bear attacks by swiping his paws downward on whatever is attacking. And I don't know who made this decision. I'm sure it was still the Japanese. Maybe, I don't know, who, don't take my word for anything. But because the bear attacks like that, that was coined and used to signify a bearish trend. But I like the bull one more. Yeah, a bearish trend is characterized by a sustained downward price movement where the price of a currency pair consistently makes lower highs and lower lows. So what makes this a lower high is because the previous high, this high is lower than the previous high. This low is lower than the previous low. If you look at the higher highs, the same thing. This high was higher than the previous high. This low higher than the previous low. That is what is higher highs and higher lows. Get it? Okay, where we at now? Anyway, during any trend, we trade using support, resistance, and trend lines. Support levels are price points where the price of a pair or an asset is expected to find buying interest and bounce back upward. Think of them as the floor beneath the price. I'll give an illustration about this when I'm done. Then resist. So you can see here support. Look at this. Look at price bounce off here and move. This place became support. Price bounced off here, came back, bounced off, came back, bounced before it finally broke it. We'll go to resistance. Resistance levels are price levels where price of a pair or an asset is expected to encounter selling pressure and reverse downward. So price hit there and reverse downward, hit there and reverse downward. Imagine them as the ceiling above a price. Now, my illustration is, think about a house. You're living in a house that has 10 floors. If you are on the 5th floor, the ground below you is a support because it's holding you from falling to the 4th floor. And the roof above you is the resistance, because if you jump, if you're one that can jump very high, it's going to limit you from getting to the 6th floor. So for you to get to the 6th floor, you have to be able to break the ceiling on the 4th floor. You need to be able to break your 5th floor ceiling and get to the 6th floor. And now, picture this mentally. If you become an incredible hawk and you jump and break the ceiling of the 5th floor and land on the 6th floor, that same resistance that was the roof would now become your support when you jump and land on top of it. That is exactly what happens here. Same thing with if you're on the 5th floor and you're able to stamp your foot and break the ground to fall and land on the 4th floor, that floor of the 5th floor that was supporting you would now become your resistance when you fall to the 4th floor. Get it? If you don't, please ask questions, comment down there, and I would probably give you an explanation again. But I'm sure you get it. I know you're smart. Next, trend lines. Identifying trend lines is also very crucial in analyzing a bearish trend. Connecting a series of lower highs with a downward sloping line helps confirm bearish trend, and the opposite helps confirm bullish trend. And I'll show you what I mean here. Look at this, a trend line up here. Prices, we are maintaining higher highs, higher lows, higher lows, higher lows. So the trend line was going on all the lows and it was able to go up. On this side of things, look at it. So the uptrend line is like a support, but it's just sideways going up. The downtrend line is like a resistance, down, just going down. And then when it breaks, it gives a sign of a reversal. Again, we'll get into all of this nicely in the chart. And then we have the sideways trend. That is when the market is trading sideways, waiting to break down or break up. Identifying levels. Identifying support and resistance are by identifying or looking for areas on the chart where price has bounced off in the past. Again, support, price bounced off. So if you're going, that's how to look for it, where price has bounced off at some point. That's how you find your support, resistance, and trend lines. Next, chart patterns. Chart patterns serve as a valuable tool for traders to decipher the market direction and make informed investment decisions. Patterns act as a warning, alerting traders towards potential reversals and enabling them to adapt their strategies and mitigate potential losses. Let's talk about some bullish chart patterns. First on our list will be the double bottom. A double bottom is a bullish reversal pattern formed by two consecutive lows, here and here, with moderate rise in between, indicating a potential change in trending direction. A triple bottom is just like the double bottom but has three. It's a reversal pattern characterized by three consecutive lows at a similar price level, signifying a potential trend reversal. So price was going down, then now it means it's going up. That's what we mean by a reversal. Ascending triangle. It's a bullish continuation pattern formed by a horizontal resistance line, and ascending support line, suggesting an upward trend is likely to continue. Inverted head and shoulder. This is a very popular pattern. Inverted head and shoulder. When we get to the bearish, you will see the normal head and shoulder. It's characterized by two lower lows and one higher low, and a central higher low, signifying a potential trend reversal. Then we have the bullish symmetric. A bullish symmetric continuation pattern is a pattern with converging support and resistance line, indicating a period of consolidation before a price pattern breakout. I know this seems like a lot of information, but that's why these videos will be shared days after days. You take it in and take it in. Don't worry, with time, all of this will become part of you. It was once gibberish to me. Gibberish. Bearish chart patterns. Now we have a double. First, we have a double top. It's the opposite of a double bottom. A bearish reversal. It's a bearish reversal pattern with two consecutive peaks at the top at a similar level, indicating a potential trend reversal. A triple top, opposite of a triple bottom, is a bearish reversal pattern characterized by three consecutive peaks at similar at similar price levels, signaling a potential trend change. Now we have a descending triangle. It's a bearish continuation pattern with an horizontal support and a sloping resistance line, suggesting a potential downward trend. Bearish symmetric. It's a continuation pattern with converging support and resistance line, this, indicating a period of consolidation before a potential price breakdown. Now we have head and shoulders. So head, my head, my shoulders. So it's one high, two lower. Head, it's a bearish reversal pattern characterized by a central head surrounded by two lower highs, shoulders, signaling a potential trend reversal. Now, what are the importance of understanding candlesticks, chart patterns, and trends? One, it's going to improve your market insight. Accurate analysis of candlesticks, chart patterns, and trends guide your investment choice by helping you comprehend market dynamics and make informed investment decisions, which enables you to anticipate potential market moves. It gives you an enhanced risk management. Identifying trends enables you to anticipate potential reversals or continuations and helps you adjust your strategy to minimize losses. We'll speak about risk management we'll speak about risk management so much because it is the most important part of trading. Again, we're still dealing with basics. We will get there. But have it in your head, risk management is the most important thing to know or to master in this trading journey. It helps you with increased profitability. Capitalizing on trends can lead to significant profits as you are aligning your investment with the market's condition. Enhance trading confidence. Better decisions, which you will get from doing this. Better decisions will lead to quality trades, and quality trades will boost your confidence in trading. Next, staying ahead of competition. Mastering candlesticks, chart patterns, and trends makes you one step ahead of a lot of traders because you will recognize trends early, and this can give you a competitive edge in the market and make timely investments. Next, reduced uncertainty. Trend analysis helps you navigate the market in a way that you are able to be certain of where the market is going. You are able to spot when it's going up, when it's coming down, or when it is ranging. So it helps you navigate the market, providing a clearer understanding of market decision. Next, we have improves market timing. Identifying trends and patterns helps you enter and exit trades at optimal time. In this video, we have explored the powerful use of candlesticks. We have explored what it means to combine, because when we have those chart patterns and those trend patterns, all those things are formed by candle. The candles form a pattern, the patterns form a trend. So it's a combination. That is why I made it one course together. I did not separate them because they go together. And it's essential first to identify the underlying trend before using candlestick patterns to confirm entry point. Think of it as a two-way step process. First spot the trend and then use the candlesticks to validate your analysis and make informed trading decisions. By combining these two technical analysis tools, you'll be better equipped to navigate the market with confidence. And that will be the end of this video. If you found it helpful, please like, subscribe, share with your friends, comment down below, and most importantly, click on that notification button so that you can be able to see my post every morning before London session. This is very important. It's a very valuable opportunity because it's going to help you get better, because you'll be able to see things, see how I think, hear how I think, and be able to watch it play out. It's a very valuable opportunity. So like, subscribe, comment, click on the notifications. My name is Bright, and until the next video on this series, peace out. Voila.